Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. Before we get started, I wanted to clear up something for those that are newer to the markets. I get a lot of remarks in the comments section by people that mistake activism and criticism of Adam Aron and AMC Senior Management for something more nefarious. Like, why are you bashing Adam? Why are you bashing the company? You're going to hurt the stock or scare off investors. Are you working with our enemies? When the exact opposite is true. First off, stating facts and opinions are not bashing. Secondly, when a stock is down over 95% off its all-time highs, people need to be held accountable, and I blame Wall Street, which prompts the question, Uncle Frank, are you saying Adam Aron is helping Wall Street? No. I'm saying Adam Aron and elements of AMC Senior Management are Wall Street, and you'd have to be blind or completely naive if you don't see that by now. How many more "Today We Pounce" hashtags do you have to endure before you believe it as well? Did you enjoy the ape, its conversion, or the reverse split? Are you satisfied with our investment in Hycroft or spending $25 million on Nicole Kidman as opposed to commercials promoting our amazing A-list program? Are you thrilled that our management team never buys our stock, no matter how low it goes, but only sell it over the past 6 years, over $1 billion worth? How many rallies does Adam have to massacre before you also become suspicious? Well, for those of you just visiting my channel to complain, let me explain exactly what I am. I am a shareholder activist. Put simply, and in this example, that means I love the company. I love the stock. But I will only support management initiatives that enhance shareholder value. I'm sure by now you've noticed that everything Adam Aron and this team does destroys shareholder value, and I, in my own small way, push back on that. You see, I supported retail popcorn and personally bought a metric ton of it, but I aggressively fought things like the reverse split because it benefited no one but Wall Street. It was planned by short sellers for short sellers in our very own boardroom. And all you need to do is read the emails from the Allegheny case for yourself to see that. And yes, I blame the hedgies. I blame the regulators. I attack them constantly on this channel. But they don't have a fiduciary duty to protect the shareholders, but our management team does. The longer you stay in the market, you will learn that CEOs and boards come and go. Sometimes the single best thing you can do for a company and its stock is get rid of the people stealing from you and ruining everything. I'm of the opinion that the stock would run to over 300 if we replaced Adam Aron with a shareholder activist CEO like a Patrick Byrne, or better yet, a Ryan Cohen, who doesn't even take a salary from GameStop. You see, Uncle Frank is a longtime shareholder of AMC. I am an A-list subscriber. I am a member of Investor Connect. I attend the theater constantly. I carry the AMC branded credit card. I own a prolific collection of popcorn buckets. What you see on the screen is just what will fit over the fireplace. And I own a bunch of other AMC memorabilia. As I've said, I buy the retail popcorn, and I am the owner of the domain names AMC Investor Connect.wallet and AMC Theaters Investor Connect.wallet. I collected every single NFT from AMC and Hycroft. I own Hycroft silver rounds, even the one with our pervert CEO's face on it. I fight behind the scenes in several legal actions against those that are trying to hurt the company and specifically the stock. I support AMC Project Popcorn because I know it's the best path to exposing exactly how many times over the apes own the float before the ape conversion and reverse split. I launched an AMC-themed YouTube channel, mainly because I felt shareholders weren't getting a fair shake from the financial media, and I wanted us to get both sides of every story. I have never had a channel sponsor. I have no Discord. I don't do lives or ask for super chats. I don't have membership fees. I don't sell coffee mugs or t-shirts. And I could give two shits if you think my facts or opinions hurt the stock, because Adam Aron has done far worse to the stock price than a million Uncle Franks could do. So, Uncle Frank, why should we listen to your opinion on AMC senior management? That's a fair question. I've been in the markets for over 35 years. I'm not a financial advisor, and this is not financial advice, but I was a division director at a small publicly traded bank, and I did report to the executive vice president and the board of directors for years. So I've spent more time in the boardroom and the C-suite than many of my critics or fellow YouTubers, so I think my opinion should be heard. I also directly work for an investment banker who took over a dozen companies public, and I've maintained close relationships with him and others for decades. Now, I believe this is one of the biggest problems in our community. We have many YouTubers and Twitter personalities out there that have become legitimate experts in technical and fundamental analysis, but I've seen very few with any real knowledge of investment banking activities, and that's exactly why they were successful at dividing the apes. I think if more apes had a basic working knowledge of investment banking and corporate finance, especially for publicly traded companies, I think Adam Aron and others would be long gone by now. Take this nut job, really bad person on Twitter. I wouldn't let this guy in the lobby of the bank, much less the boardroom, but he is entitled to his opinion. The problem is he insists anyone that doesn't agree with him has no idea what they're talking about. Now, I have more in common with guys like this than they'd care to admit. We both wildly support the theater and the stock. But what's painfully obvious is this guy and many others think the APE, our preferred share, was the only course of action we could take, or we'd be out of business by now, and that's the most ridiculous thing I've ever heard in my entire career. Issuing a preferred share as a dividend for a penny, then converting it into common, then swapping it for debt at record low prices was certainly not the only thing we could do. But let's start with the basics of investment banking with a comment from Investopedia. Investment banking is a type of banking that organizes large, complex financial transactions, such as mergers or initial public offering underwriting. These banks may raise money for companies in a variety of ways, including underwriting the issuance of new securities for a corporation, municipality, or other institution. They may manage a corporation's IPO. Investment banks also provide advice in mergers, acquisitions, and reorganizations. Now, in our case, guys, that's things like the APE, our preferred share, the Pounce, its conversion or the reverse split, the deals we made with Wanda, Mudrick, or Antara Capital. You see, for years, that's all been handled mainly by our chief investment bankers, Citi and Derek Van Zandt. Has it ever occurred to anyone we could have issued our preferred shares and sold them to investors, or did private placements instead of giving them away as a dividend? We could have sold warrants, which would have raised capital instantly and made them exercisable at higher prices, raising even more capital. You see, those options were available to us, but were never pursued because they had the potential to benefit us and wasn't what Wall Street needed. They desperately needed us to issue and convert APE, taking it from a like security to a real locate. This mass dilution was just the ticket to drive the price down and help trap short sellers. When you add a reverse split we never needed to do, an investor relations department that refuses to release any positive news to combat the FUD in the financial media, and then a CEO that constantly kills the stock every time it picks its head up, it becomes clear that Citi had a plan and AMC Management helped them execute it. Now, I asked multiple people with deep investment banking acumen their opinion on APE when it was first discussed, and they arrived at some interesting conclusions. The most common remark was that the APE the APE's top priority was certainly not to raise capital. There were 20 other ways to structure an offering to raise money, and this one wasn't even close. One guy said he would do a rights offering or a series of A and B warrants exercisable at different prices higher than the price of AMC was currently trading. Another commented that the APE was little more than a poison pill, which could make it difficult, very difficult, for a hostile buyer to acquire the company. He added they did it as a dividend because dividends are declared by the board and might be an effort to avoid a shareholder vote on the matter. He would add that if enough stock was placed with parties sympathetic to management, this could swing a shareholder vote to management's favor. Doesn't that sound familiar? As I've said many times, I'm in the market to make money, not to win arguments. So let's continue to learn together from Investopedia. Why would a company issue preferred shares instead of common stock? Okay, from the article, there are several ways companies can raise funds, including stocks and bonds. Corporations can also choose which kinds of stock they offer to the public. They base that decision on the type of relationship they want with shareholders, the cost of the issue, and the need prompting the financing. When it comes to raising capital, some companies elect to issue preferred stock in addition to common stock. However, the reasons for this strategy vary among corporations. So what are the key takeaways? Preferred shares are an asset class somewhere between common stocks and bonds, so they can offer companies and their investors the best of both worlds. Companies can get more funding with preferred shares because some investors want more consistent dividends and stronger bankruptcy protections than common shares offer. Some companies like to issue preferred shares because they keep the debt-to-equity ratio lower than issuing bonds and give less control to outsiders than common stock. Remember that. Now, for those of you that hate me because I say nasty things about the APE and AMC and its management, I'd like you to consider this, okay? I don't even know what this company is, if they're still around, what they do. It's called Vertex Omni. And I wanted to show you this offering that they put together back in 2016 for selling their preferred stock. What they did is they sold about 6.4 million shares of a new preferred share at a price of $2.33, and they raised $15 million. Now, I'm not saying to do it at this exact price. We needed to raise a lot more money. But I brought this up to show you that the APE, paying it to shareholders as a dividend for a penny, was not the only way we could go. Okay, Adam, Citi, and Philip later of Morgan Stanley could have structured a normal preferred share offering. We could have sold, I don't know, 10, 20 million shares at $20, $50 a share. I mean, you name it, but we didn't have to do what we did. So ask yourself, APE is already come and gone, right? What did the short sellers need? Well, they needed locates. They needed legitimate shares. We all believe there are millions, maybe billions of synthetics out there. And what they really needed were legitimate AMC shares to cover with. So what do? You convert the APE, which is a like security to AMC, into AMC. Now it becomes, right? Now it becomes a legitimate AMC share, right? And maybe you even place it with the people who need it the most. Okay, so we didn't have to pay it as a dividend. We could have done an offering and raised some badly needed cash. And think about it. What is a preferred share from the previous slide? It's like a hybrid between common stock and a bond. So it's going to pay interest. I think the apes would have bought it. I think we all would have loved it. We'd have loved to raise money for the capital, own a brand new ape, and it could have been convertible into common stock like this one from Vertex Omni, right? But our short sellers needed the stock down. How do you do that? Okay, you dilute, reverse split. And how do you provide them locates? You turn ape into a legitimate AMC share. Okay, so guys, before you attack me, think about it. Did we really have to pay out ape with a par value of a penny as a dividend, or could we have just did an offering of a new preferred share, raised money, right, and used that money to pay down debt? It would have been a lot better than what we got going now, wouldn't it? So now let's review some comments from the earnings call. As I said earlier, and as our financial results prove, 2023 was clearly another year of recovery and improved performance for AMC. But it was not a good year for our shareholders. Adjusted for stock splits, the AMC share price has fallen to a fraction of where it was as recently as last summer, and I promised our shareholders that I would use this earnings webcast as a forum to provide them with some straight talk, to give them my take. So here's my take. There is so much garbage information floating around Twitter, YouTube, and other corners of the internet about AMC. Conspiracy theories abound. Facts are distorted. Bad motives are assumed when the exact opposite is true. So I want to address some of these issues so you get the straight scoop. Well, here's my take on your earnings call, Adam. You knew before any of us what the fourth quarter was going to look like, but for $2 million a month, you still showed up empty-handed. You say it wasn't a good year for the shareholders, but are 100% responsible for diluting the company in this particular manner, and you pushed a reverse stock split on us, but you never gave a reason why, because there wasn't one, other than Wall Street might have needed one. You murdered the rally we could have had after our third quarter results. It was the best quarter in our company's history of third quarters, even better than pre-pandemic. The strike ended that very evening of the call. You never mentioned any dilution during that call. It was one of the best trade setups I've ever seen, but I noticed after hours the stock didn't do anything because Wall Street knew what was going to happen the next morning, in my opinion. And then you dropped the dilution bomb on the stock, pre-market. We could have had a much better year, but you took that chance away again. Then you showed up to this call empty-handed. You could have said, with the exception of an emergency or an amazing opportunity, we will cease diluting for the rest of 2024, for example, since we have over $800 million in liquidity. In my opinion, the stock would recover sharply if you had done only that, but as always, you refuse. You say our phones are ringing off the hook for more concert films, but you showed up to this call without a contract in hand. Not even a whisper, like we're negotiating with artists like Dua Lipa or 50 Cent, for example, about a possible concert film. But that might help the stock, and you simply can't have it. Elsewhere in the presentation, Adam would remark, a company does not post the kind of improving financial results as AMC just did today if one is out to sabotage one's owners. One does not sell $54 million of movie-themed merchandise in our theaters and online as AMC did in 2023 versus virtually no sales of such items only a few years ago if their motives are impure. I would point out, by the way, that selling merchandise was an idea that came in from our retail shareholders, by the way. Yeah, we're the ones that buy it too, Adam. The other theaters can't get away with it because they don't have loyal shareholders like you do. But Adam, no one, including me, has ever accused you of wanting the company itself to perform poorly. Every CEO wants their company to excel. How else will we pay every AMC senior executive top 5 comp plans ranked by their titles per industry? I have never heard anyone say you're trying to sabotage the company. What they say is we can always count on you to sabotage the stock price, and you have. Beginning in 2020, this company has been paying its executives like there never was a pandemic, like the theaters were never closed, like we aren't being starved for content from Hollywood, like we're not competing with the big streamers. You've been paying yourselves more like we're NVIDIA. For example, cutting your stock bonus by 25% means little to us, with our market cap down 93% year over year, when you make nearly 4 times what the CEO of Cinemark earns. Now, here's an interesting story from the street that I wanted to share with you. Iconic movie theater chain Metropolitan Theaters Corp. has filed for Chapter 11 bankruptcy protection to reorganize its business affairs, which will include restructuring and possibly rejecting theater leases, company president David Corwin wrote in a bankruptcy declaration. The LA-based movie theater chain on February 29th filed its Subchapter 5 bankruptcy petition in the U.S. Bankruptcy Court for the Central District of California in Los Angeles, listing about $26.5 million in assets and liabilities. The debtor said in court papers that the financial distress caused by the temporary closures of theaters during the COVID-19 pandemic in 2020 continued after theaters reopened, as the in-person movie viewing business remained slow in the ensuing years. The slowdown in business, coupled with significant lease obligations and business expenses, negatively impacted the company's financial stability. The company in 2022 shut down 2 poorly performing theaters in Aspen, Colorado, and Haley, Idaho, to reduce its losses. Movie industry labor disputes from May 2nd to November 9, 2023, which led to strikes by the Writers Guild of America and Screen Actors Guild Federation of Television and Radio Artists, put further strain on the theater business, the debtor said in court papers. The industry has forecasted impaired performance in 2024 and into 2025 from fewer film releases due to production delays. Domestic box office sales are expected to drop 11% in 2024 from 2023 levels due to fewer film releases. Metropolitan Theaters was founded in Los Angeles in 1923 during the silent film era with one theater, the Broadway. The company grew over the next 2 decades to become the dominant downtown Los Angeles movie theater operator in the late 1940s, court papers said. The company currently operates 16 theaters and 87 screens, including 2 IMAX auditoriums in California, Colorado, and Utah. Okay, so why are you pointing this out, Uncle Frank? Well, I'm glad you asked. I have long believed that with the advent of streaming, the COVID-19 pandemic, and more recently the Hollywood strikes, the theater industry will contract. It will get smaller. But AMC is the one business in the space that seems uniquely positioned so that it can thrive and even expand under these same conditions. I believe that it's because AMC has something our competitors do not, and that's the apes. Plus, it's the apes that forced AMC management to modify its business model to include things like retail popcorn, a branded credit card, a burgeoning collectibles business, and thanks to Taylor Swift's dad, a new distribution business. Ideally, what I was really hoping for is our competitors to disappear and or get smaller while AMC gets larger and leaner, possibly even becoming a legal monopoly in the exhibition business. One of the best things about being the biggest theatrical company in the world is if you wish to bring content to an indoor audience, you have no choice but to go through AMC. Unfortunately, Wall Street and elements within AMC management don't see it that way. What they see is a future of streaming only and wish to extract every penny they can from this 100-plus-year-old business before it fades away. Well, AMC has survived world wars, recessions, and a depression, a pandemic, and Hollywood strikes, and it will also survive the hedge funds attacking it, as well as people like Adam Aron, Sean Goodman, Philip Lader, Derek Van Zant, and Himanshu Gulati, in my opinion. On that note, let me be the first shareholder to welcome our new member to our board of directors, Ms. Sonia Jain. Sonia brings to the board extensive financial and accounting experience, including as a chief financial officer of a publicly traded company. I'm impressed. Jane currently serves as CFO of Cars.com, where she has worked since October of 2022. Sonia, Let me give you some tips. Just zoom in for the meetings, have those fat checks our board members get direct deposited, and whenever we give you stock, just sell it. No one cares what it looks like. They all do it. And here's the best part. You'll never feel any pressure to actually buy the stock. Not one of them has in over 6 years. Now here's the announcement from when Sonia got the Cars.com gig. Sonia has been chosen as Chief Financial Officer of Cars.com. Jane joins the company from movie rental company Redbox, where she also served as CFO. At Redbox, Jane oversaw finance, treasury, strategy, and analytics, as well as mergers and acquisitions. Previously, she was Vice President of Finance and Treasurer at Outerwall, which was acquired by Apollo Global Management in 2016 and broken up into 4 different companies, including Redbox. Before that, Jane was an investment banker at Morgan Stanley and a consultant at McKinsey & Company. Now, followers of this channel know, hit that subscribe button, that Adam Aron was a senior operating partner of Apollo for 9 years and was paid by them until March of 2017. And yes, Adam joined AMC in January of 2016. That's Adam's boy, Leon Black, pictured on the right. Now, the guys over at Apollo are a lively bunch, especially Leon. Here's a headline. Leon Black agreed to pay $62.5 million to settle Epstein-related claims. The private equity mogul struck a deal with the U.S. Virgin Islands to avoid a potential lawsuit over his ties to Jeffrey Epstein. And then another article. Apollo co-founder Leon Black wins dismissal of rape accuser's lawsuit. From the article, a New York State judge, I think this was in May, dismissed a lawsuit accusing Apollo Global Management billionaire co-founder Leon Black of defaming a woman by falsely claiming she tried to extort him after accusing him of rape. Justice David Cohen said the accuser, Guzel Geneva, could not pursue her claims after receiving $9.5 million from Black under a non-disclosure agreement that followed their 6-year relationship, which ended in 2014. Black, 71, has denied raping or behaving inappropriately with Geneva, who is about 3 decades younger. Black left Apollo in 2021. Cohen said Geneva's acceptance of Black's payments and decision not to contest the non-disclosure agreement barred her from claiming she signed it under duress. The Manhattan judge also found no proof that Geneva, a single mother and former Russian model, did not understand the agreement. Now, guys, don't be painting Adam Aron with the same brush as his pal Leon. Adam doesn't behave that way. He just has sex with like a teenage ballerina, photographs the incident, and then sends the images to strangers and subsequently gets, catfished and blackmailed. He's a good CEO, so you just stop it right there. So, Uncle Frank, I've always wondered, what does Apollo actually do? I mean, if Adam Aron was a senior partner and was there for 9 years and they were paying him even after he started running AMC, shouldn't we know what kind of business they do? Absolutely. And, our new board member worked under Apollo and comes from Morgan Stanley, so you should always investigate those things. Let me read you an excerpt from the New York Times article titled The Big Short 2.0. How hedge funds profited off the pain of malls. As the pandemic accelerated the demise of some brick-and-mortar retailers, a group of investors profited handsomely from their travails. Now, this is from like mid-2020 from the article. Brick-and-mortar retail has been in distress for years, trapped between the growth of online shopping and the popularity of discount chains. Many retailers have struggled to find a foothold in the changing firmament. The nation's roughly 1,000 shopping malls, excluding strip and outlet malls, have borne the brunt of the problems, with hundreds of them fighting low occupancy and the loss of major stores known as anchors. Now, since my subscribers are the smartest of all YouTube subscribers, what kind of business is usually considered an anchor tenant of shopping malls? That's right, movie theaters. You see see, we've got the same challenge here. We don't get the same kind of foot traffic because of things like the pandemic and streaming. So we're in a tough spot, and we're connected to the malls. Anyway, the story continues. The coronavirus pandemic, which prompted stay-at-home orders, increased the financial strain on malls by choking off much-needed foot traffic and cash flow. The pandemic sped up the rate of demise for CMBX6 malls by being the final straw for a lot of struggling retailers and mall owners, Ms. McKee said, referring to the obscure real estate index that she bet against because of its exposure to troubled malls. Okay, CMBX6, these people, that they're tracking commercial loans, right? Commercial loans, bonds, etc. The private equity fund Apollo Global Management, which runs an internal hedge fund that focuses on credit investing, made more than $100 million shorting the CMBX6 and other commercial real estate securities. One of the fund's most successful trades of the year. So I'd like to pause and say that for 9 years, Adam Aaron ran Apollo Global Management, a senior partner, and they have an internal hedge fund that shorts struggling companies. Let's just keep it real. The article continues. Jason Mudrick, you guys know him, whose New York hedge fund Mudrick Capital focuses on distressed investments, estimated that he made the same amount. So did Scott Berg, Chief Investment Officer at Deer Park Road, a fund in Steamboat Springs. So far this year, 16% of all retail industry loans are delinquent. So we're still in 2020, remember that. According to statistics tracked by the data firm TREP, major retailers including JCPenney, Neiman Marcus, and Modell's Sporting Goods have filed for bankruptcy, and new tenant demand for mall space has never been weaker, according to an analysis of national malls by the advisory firm Green Street. The closure of anchor stores only exacerbated the financial duress, given that, as Green Street noted in a recent mall survey, their departure can allow other tenants to reduce the rent they pay. Some landlords have opted to hand ownership of their struggling malls back to their lenders, making distressed sales of those investments very likely. Guys, let's read that again. Some landlords have opted to hand ownership of their struggling malls back to their lenders. Did you guys know this is Adam's real background? This sounds more like Wall Street than the theater business, doesn't it? These executives actually walked the malls so they could determine which malls were most at risk, and then they got together and shorted the hell out of them. Now, people like that, they run your company. Starting to make sense yet? So, Uncle Frank, tell me why we really invested in Hycroft Mining. All right, we're still in 2020, so stay with me. I mean, Hycroft's going to need another $1 billion in investment before they could even dream of ever producing a profit, right? Well, this article, it might hold a hint. Apollo circling AMC as theater chain scrambles to stay afloat. Sources. AMC Entertainment is being circled by a trio of investment firms, including Apollo Global Management, as the movie theater chain scrambles to stay afloat amid the pandemic, the Post has learned. Apollo, along with Canyon Capital and Davidson Kempner Capital Management, are holders of AMC's first lien debt, are urging the company to file for Chapter 11 bankruptcy, and have offered $1 billion in debtor in possession financing, according to sources close to the situation. The deal would keep its theater doors open in the coming year and land AMC in the hands of the investment firms, the sources said. Apollo, whose embattled chief executive Leon Black is being probed over his ties to dead pedophile Jeffrey Epstein, is leading the campaign to take control of AMC, insiders said. AMC's embattled chief executive Adam Aaron is resisting Apollo's overture and looking to buy time. On Friday, the company instead announced it has reached a deal to borrow $100 million in senior loans from Mudrick Capital Management and at a 15% interest rate. So, Uncle Frank, are you saying our CEO used to work for a company that panic sold AMC and makes money shorting commercial real estate and is now running our firm? That's right. Adam's resume has way more experience in distressed credit on Wall Street than it does running gold mines or movie theaters. So guys, instead of selling our preferred shares to the apes and the public and raising a small fortune, he gave them away as a dividend, massively diluted the stock, declared a reverse split no one ever needed. We were in no way at risk of being delisted at the time. And before all that, invested our money in a previously bankrupt gold mine. You remember, there's gold in them thar hills. Well, gold set an all-time high, and of course, Hycroft set an all-time low. We could have used that money to pay down debt. We could have promoted the A-list program. I think it's the best one out there. Could you imagine a TV commercial that shows how a Hulu subscription can cost you $90 a month, but the A-list program will let you see up to 3 movies in the theaters every week if you wanted to? I think, it's the best thing out there, but we don't do that. We make these kind of unusual investments. Hycroft Mining announces $56 million equity investment from renowned precious metals investor Eric Sprott and AMC Entertainment. This seems outside of the scope of our business, doesn't it? Especially in retrospect. But anyway, what did Hycroft use the money for? Use of new capital. Hycroft intends to use the net proceeds from this private placement for general corporate purposes, which may include the repayment, refinancing, redemption, or repurchase of existing indebtedness. Okay, holders of the notes, who are we paying off? This is what it looks like, including certain funds affiliated with or managed by Mudrig Capital Management, Whitebox Advisors, Highbridge Capital, Arestia, right? Wolverine. Okay, guys, is it a coincidence that all 5 of these investors or hedge funds were short or are short AMC or are long puts against AMC? In other words, would benefit from the decline of AMC? All 5 of them. Okay? This is an unholy relationship we've got with Mudrick over there. Highbridge, let me tell you about them. They're 100% owned by JP Morgan Chase. They were short AMC. Okay? Jeffrey Epstein got like a $17 million finder's fee when JP Morgan Chase bought Highbridge, right? Guys, what are we doing in business with these people? These are the kind of people that run AMC right now. When you take a look, when you take an objective look, you will see we are literally run by Wall Street, top to bottom and left to right, and I'll prove it to you. Okay, so we learned about Apollo. Let's look into Morgan Stanley. Recently, Morgan Stanley to pay $249 million to end block trade probes. Guys, this was 2 months ago. This was January. Bank enters non-prosecution agreement with Justice Department. So what was Morgan Stanley doing? Well, their institutional trading department or their block trading department, that's what Morgan Stanley's really known for. That's one of their, biggest, most prolific businesses is block trading. What they were doing is telling their best clients, some of their hedge funds, about big trades, big buys and big sells that were coming from their other clients. In other words, front running, right? And who benefited from that? Well, this is from February. Last month, Citadel, among hedge funds that got Morgan Stanley's block trading leaks. And of course, Citadel and other hedge funds weren't accused of any wrongdoing. Okay, so now everything you've learned about Apollo and Mudrick and Morgan Stanley, I want you to take a look at our management team in that light. Now, guys, for fun, I added our new board member, Sonia, to the management lineup. Now, I ask you, be honest, are any of these people from the theater business? Are any of them from Hollywood? Or are they from Wall Street? Let's review. These are the people that run your company. Okay, on the left, we know that's Philip Lader. He is the leader of our board of directors, but he is also senior advisor to Morgan Stanley for institutional trading. Do I have to remind you that block trading is institutional trading? He's pictured there with his daughter. She's in senior management at Uniswap, where they found what, 84 trillion tokenized AMC trading. Maybe it's a coincidence, guys, but you know what? It's bad optics. I don't like it. So then we've got Sonia, our new board member. We know she worked as a CFO for a company under Apollo. She also hails from Morgan Stanley. Then there's Sean Goodman, my favorite CFO, probably my least liked AMC executive. This guy has sold over $17 million worth of stock in a very short time. This man knew better than anyone what the conversion of APE was going to do, the reverse split. He signed off on it all. He comes from mergers and acquisitions from Morgan Stanley. Then there's Adam. We learned all about Apollo today, right? I mean, guys, they have a hedge fund that shorts properties just like ours. Then there's our chief investment banker, Derek Van Zandt from Citi, a frequent short seller of AMC, our chief investment banker. This guy is the author of the APE, the reverse split. He brought the whole thing together. He took all that information off his LinkedIn page now. Okay? Citi is a frequent short seller and or put holder against AMC. They never miss an opportunity to downgrade us or slash our stock price. I mean, guys, you couldn't have a worse wolf in the chicken coop than this guy. And then there's Himanshu Gulati, Antara Capital. I mean, guys, just for once, instead of being mad at me, just read the emails where Antara agreed to vote the way management wanted to. Okay, guys, take a good look. These are the people that run the company. If you wonder why the stock goes down every time they do anything, think about it. Will you just be reasonable and think about it? Ask the popular YouTubers and Twitter personalities, is anyone on this screen really on our side? Because when I look at our stock price, I'd have to say no. Now, as you guys know, Adam is selling stock again. We still don't know the price. It'll trickle over to SEC Form 4. Eventually, we'll get to see it, but February 22nd, unloaded 113,833 shares. We don't know at how much. Immediately, the yes-tards and Adam Aaron fanboys attack me. He's doing it for taxes. That's what they always do. Okay, let's see if that's true. Now here's the proof. They're all unanimously selling together. Elizabeth Frank, Daniel Ellis, Sean Goodman, Chris Cox, Adam Aaron, Kevin Connor. Everyone is selling, all reporting on the same day, everybody working together, okay? This is highly suspect, but they're all selling again, and they're all selling using the same excuse. It's for taxes, okay? Now, before we go on, I want to remind everybody that over the past 6 years, Adam Aaron, the entire senior management team, and the entire board of directors have never purchased one single share of AMC, no matter how low the price goes. Not even, I'm going to buy $100 for my niece or $1,000 for my nephew. I mean, absolutely nothing. Nothing but selling. Now, ask yourself this. What if they were all buying before this earnings call? Do you think that might have helped the stock? They'll never do that. They only sell. They only sell. They never buy. Okay, so now many of my enemies attacked me about one of my previous videos. You didn't say they were selling for taxes. That's what they always do. They needed to sell. Okay. Let's see if that's true. Let's analyze how Adam Aaron is actually paid. We're going to look at 2022 because the 2023 numbers are not available yet, but Adam's base pay is $1.5 million. Adam's cash bonus, this is non-stock, is $6 million. Adam's stock award for 2022 was nearly $16.2 million, then another $22,000 in incidental things, bringing the total comp plan to $23,716,000. Now, guys, if he does the same or better than 2022, that brings his comp plan over the past 5 years to just under $97 million, almost $100 million. That includes the pandemic, the rationing of all, of movies from Hollywood, competition from streaming. Adam has gone from 9.6 to 23. You can't tell me that the pandemic wasn't the best thing that ever happened to this guy. But forget all that. I want to answer the charge from my enemies. You mean to tell me a guy that gets $5-6 million a year in cash, non-stock bonuses, has to sell his stock to pay his taxes? Are you sure? Are you sure you're going to stick with that rationalization? Okay? Because in 2020, our company lost $4.6 billion. In 2019, Adam's total comp plan was 9.6. In 2020, the year that our theaters were closed down part of the year, it ballooned to 20.9. Okay, now it's up to 23.7. So Adam is going to take a 25% cut on his stock bonus because the stock is down. That's what he said in the earnings call, right? But this man makes nearly 4 times what the CEO of Cinemark makes. Is any of this getting through to you yet? Okay, so for those who have made it this far on this video, this is for you. This is hours and hours of work for me, and I do it for all of us, mainly because we still want to win. We refuse to give up. Now, I'm not a financial advisor. This is not financial advice. I will never tell you to buy, sell, or hold any security or cryptocurrency. But let's admit, at this time, there is nothing this management team is going to do to help us or challenge the bad actors on Wall Street. In my opinion, the only way for us to win is for our enemies to lose. They will have to make a mistake, just like Archegos and Credit Suisse. I can't say we're going to win, guys. What I will say is I believe that if a white or black swan were to appear in the middle of all these economic challenges, that could create a crisis within the leverage chain of investments held by our enemies, the hedge funds, turning their prime brokers against them, demanding a rebalancing of portfolios or cash, and that means margin calls. So I put these calendars together so we know which events are scheduled and when, so if a swan lands, we are prepared as we possibly can be. So we had the shit earnings call. I want you to know, if Adam and company really wanted the stock up, they could have all bought a little stock before the call, before any blackout period, maybe even in the threes. Instead, they sold. They could have suspended more dilution for a specific period of time, with an exception for emergencies. He refused. They could have been ready with a contract in hand for another concert film, or at least hinted at negotiations with another artist. He showed up to this call empty-handed, even though AMC did an amazing job quarter over quarter and year over year. Adam let another opportunity to help the stock recover pass, even though we pay him $2 million a month. All right, so the earnings call is behind us. We had PCE, the government did not shut down on Friday, and Dune is tearing it up at the theaters as we speak, right? So what's coming next? Next week, Wednesday, we get ADP employment. But more importantly, Wednesday and Thursday, Fed Chair Jerome Powell will testify before Congress. That could get dicey. We're also going to see initial jobless claims and consumer credit on Thursday the 7th. Now, Friday is a hot day. That's the next possible shutdown date for the government. And we also get a look at U.S. unemployment. So the unemployment rate comes out Friday the 8th. That's going to be big. Now, Monday, March 11th. This is a treacherous week for our enemies. Monday, FRB ends the Bank Term Funding Program. Tuesday, CPI. Thursday, PPI. And March 15th, Friday, triple witching expiration day, the first one of the year. That's the same day Same expiration day, we've seen that huge swell in AMC calls. What does it mean? We don't know yet, but somebody is expecting something. So that week is hot. Now the following week, all we need to worry about is March 19th and 20th. It's a Tuesday and Wednesday. That's when the next Fed meeting is, and they've said they're going to focus shift to balance sheet runoff. Dude, this is a hairy time window we've got going here. What we want to see is a black or white swan land right in the middle of it and cause a rift for our enemies on Wall Street. So, Uncle Frank, what else you got? From film, Dune, Part 2's box office debut is twice the size of the first movie. We just keep busting their balls, right? We just refuse to die and go away. Now, if Adam was really sincere about supporting the stock price, imagine if he would have said, we're going to postpone dilution for a specific period of time during the call. Imagine the momentum we'd have right now if you add our first blockbuster of the year to a hot earnings call, right? Don't hold your breath. So what does Wall Street want you to watch next week? From Wall Street Breakfast, the U.S. jobs report for February will be the headline economic event of the week. Economists forecast that employment is likely increased by 190,000 during the month, and the unemployment forecast is anticipated to stand pat at 3.7%. Remember that number. Notably, the month-over-month increase in average hourly earnings is expected to slow to 0.2% from 0.6% in January. The jobs report will arrive just 12 days before the next Fed Reserve Open Market Committee meeting on March 20th. And what about crypto? Bitcoin's on a meteoric rise, breaking $60,000 this week and doubling down on its $50,000 record last week. And it's not the only crypto the market is feeling bullish on. Ethereum surpassed $3,500 earlier this week. AI tokens recorded record gains of over 80%, and Solana jumped over 30%. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.